I'm going to show you guys exactly how to do top-down analysis using ICT's concepts. We're going to start off on the weekly time frame, and I'll show you how to scale all the way down to a 1 to 5 minute for an entry model. The purpose of using the higher time frame is to understand where price is heading. Is it likely to head higher or lower? And if it's likely to head lower, we only want to be looking for bearish 2022 models on the lower time frame, stuff like this, looking for shorts in bearish fair value gaps. But if it's likely to expand higher, we only want to be looking for bullish 2022 models, right? There are ways to do counter trend trades, but ICT recommends not to do that. So I want to figure out, is price heading higher or lower? Then I know to look for a bullish 2022 model or a bearish 2022 model. That's what starts the framework. Is price likely to trade higher or lower on the weekly time frame? And then we could scale down into lower time frames. On the weekly, price takes out sell side liquidity, and we also do have this bullish fair value gap. So if price is going to be in a sell program or in sell side delivery, meaning it's going to continue to offer lower prices, price is going to expand below old lows. If price starts to reverse below an old low, that's enough to start considering to look for long setups, but we need to use a little bit more framework on the lower time frame here. So that's what I'm looking for below sell side liquidity. Does price expand lower, or do we start to reverse? Now going down to a 4-hour chart, you could go to a daily chart here. I don't really get much from this because there's really not much to look at on this daily. You can see that we do have this little small imbalance right here. But if price is going to switch from a sell program into a buy program, meaning it's going to start offering higher prices, price is just going to cut straight through a daily bearish fair value gap. So in buy programs, when price is going higher, you're not going to want to mark out these bearish PD arrays. Price is just going to cut straight through them. In sell programs, you're not going to mark out bullish PD arrays. That's why this right here fails, and price just starts to head lower because price was in a sell program. So it's important to not just start marking out every daily fair value gap. I think that could be extremely cluttering on your chart. So when I see this, I'm ignoring the daily time frame in here. There's not much. I can drop down into a 4-hour chart from here, and I'm looking to see, this is the weekly sell side liquidity level, this black line. I'll make it a little bit more highlighted. Does price see lack of displacement below here, or does it displace beneath it? That'll help me frame the next bias. So if we let this play out, overnight it does start to trade higher and we displace up. If we go back to the weekly time frame, I'll leave this for a study on your own. You could see that NQ has not taken out this previous low. So NQ is not down here while ES is down here. So if you look at the NQ chart on the weekly time frame, NQ is all the way up here while ES is down here. That is SMT divergence. That's another potential reason to look for long setups. And then on top of that, we have SMT. It took out sell side liquidity. It created a 4-hour market structure shift to the upside. Notice on this 4-hour candle how it trades directly down and taps into this bullish fair value gap right here. What does it do in the bullish fair value gap? We get an immediate reaction off of that. So see that big wick to the downside, then it starts to trade higher. This is an institutionally sponsored candle. So smart money is buying this up in the fair value gap right here. Price starts to trade higher. So that's an immediate reaction to me that price is in a buy program. Why? Because we have the SMT. It took out weekly sell side liquidity, created the market structure shift with the fair value gap. Not only that, it returned to the bullish fair value gap and gave a reaction off of that and started to expand higher. This is a sign to me smart money is long and they're going to start targeting old highs. Where are old highs at? We have old highs right here. So this would be like the low-hanging fruit draw on liquidity. What ICT also talks about is drawing a dealing range or a displacement range from this swing high up here to this swing low. Why this high to this low? Because this high really started that recent delivery to the downsides. This is like a low-hanging fruit premium to discount range. So we could target this level of buy side. What we could also target, if price is going to stay in a sell program, it can just return to this bearish fair value gap in a premium. So above the 50% level, you can mark out a bearish fair value gap and you could target a premium array. If price is going to be the buy program, again, it's just going to cut through that, but that's like a low-hanging fruit target. This is also another old high up here. So these are all potential levels that we have now just by going over that previous analysis. So the first level I want to target is 42.05. That's this first level of buy side. If smart money is long, they need to take price above old highs so they could sell to buyers at a higher price. So now knowing that price is going to want to draw into this 42.05 level, from the 4-hour time frame, I can now scale into a 1-hour time frame. So from the 4-hour chart, we could scale down into a 1-hour time frame. And now what I'm doing is I'm just marking out bullish PD arrays until price reaches this 42.05 level. So if price is in a buy program, there's no reason to now be marking out bearish PD arrays. So I'm not going to worry about bearish fair value gaps. I'm not going to worry about bearish breakers, bearish mitigation blocks, stuff like that. Because price is in a buy program and it's going to want to head for this high, I'm only looking for bullish PD arrays to mark out. So we have this bullish fair value gap, which is in a discount. So drawing a fib from this swing low to this swing high, it's below the 0.5% level, which means it's in a discount of the range. So now from this 1-hour fair value gap, you could start to look on lower time frames for confirmation setup. So you could scale down to a 15, 5-minute, 1-minute time frame and start to look for this signature in price action. The only reason that we're looking for this signature in price action is because it's already proving to us that it wants to head higher. So on the 1-hour time frame, it returns to a bullish fair value gap. I'm going to drop now into a 5-minute time frame. You can see that it also took out sell side liquidity. So here's when you start to look for raids on liquidity, right? Since I'm looking at a bullish model, I want to see price go beneath a swing low, which we have right here. And then I want to see price start to expand higher, creating a bullish fair value gap. Notice how it creates a market structure shift higher. We also do have this imbalance right here. When price trades down into that, I'm looking to long. So I want to see it trade down into this fair value gap before it starts to run this buy side liquidity, right? It could run the buy side liquidity, then return into it. But typically you want to see it return into the fair value gap before it starts taking out all of these old highs for an entry. Price returns into it here. This is where I'm interested in going long. So I go long here, and then I'm looking for price to expand higher. So for those saying it's easy to say that in hindsight, I did call this in my Discord real time. So I posted this chart to Discord members where I did basically say we have a bullish 2022 model, have the eyeball on the buy side because it's likely to draw into that. So that is where I longed in a discount of the range in this fair value gap, and price was likely to expand into the buy side. So that's kind of how I use the framework of the higher time frame. We had the 4-hour bias that it's going to want to draw into that 42.05 level. Price returns to a bullish PD array on the 1-hour. You could also use a 15-minute. On the 15 or 5-minute time frame, you could look for liquidity to be ran. You could also look for it on the 1-hour time frame. It's pretty much all preference. Price starts to trade higher. Bullish fair value gap, right? This is a long entry. And since the higher time frame is bullish, this 2022 model will work and price will start expanding higher. So this is a low-hanging fruit target. What does a low-hanging fruit target mean? It means that this is just a very easy target. So when price trades into here, I just sell because I know that I believe there was FOMC the next day. So there was like the potential for chop. I didn't want to get caught up in this. So as you can see in the picture, I took off here. So I took off full position there. Price starts to consolidate, but it's likely to start delivering into that 42.05 level. So if we let it play out even longer, you can see that price starts to trade higher towards the end of the day. This low is now protected, and they won't run it back on that low. Because the sell stops were ran, smart money bought from sellers at a lower price. Now that low's in place, and it's going to start displacing towards that higher time frame draw on liquidity. You could see it'd be extremely easy to come in here and look at something like this as a short model. A lot of people probably went in here thinking that we had a bearish market structure shift lower, maybe on like a 30-minute or like a 15-minute time frame in here, thinking that this is a 2022 bearish model short, and then it's going to start targeting sell side liquidity. You need the higher time frame bias to know which model to look for. We have that, so that model plays out. So we're going to go ahead and fast forward to the next trading day. And I want to see what does price do above this previous high right here. So above 42.05, this is important to start framing the next bias. Do we reverse here or does price expand higher? So I'm going to go ahead and skip this ahead. This was the day that there was FOMC. I believe Powell was talking around 2 p.m. When this happens, these are days where you just want to wait till after. I like to wait till after 2:45 p.m. on FOMC days that Powell is speaking, because that's usually when the real move starts to take place and you start to get that displacement in that direction. Notice how price expanded over this previous high. This was our low-hanging fruit target, and it traded higher going back to the 4-hour time frame, and it's starting to displace above this bearish fair value gap. This is a sign to me that smart money was not content pretty much with selling to the buyers above this previous high right in here, and that they want to take it higher and target the liquidity above. So now I'm thinking price is going to want to run into 42.90 and then start to trade higher. If you guys would like to see me do my top-down analysis on the NASDAQ and the S&P 500, I do it in my Discord, which I will leave first link down below. And also pretty much every day I'm going in looking for intraday setups, which I do share my ideas in the Discord. Here's an inside look. Nice community of over 180 people. Members will share their ideas in the Ideas tab. So it's a nice community to surround yourself with people who are trading the same concepts. Here was yesterday. We had a nice market maker buy model towards the end of the day. This was 12:42 p.m. The inception of that market maker buy model was the 2022 model. So I was looking for price to start delivering into buy side. Shared this with Discord members around 12:42 p.m. Said 2022 bullish model. Price was likely to start delivering higher. That first buy side did hit. That was a nice little partial area. Here is where I got out at the top of the market maker buy model. Once it completed and hit that original consolidation, the only reason that Discord members knew to start looking for higher prices is because the higher time frame was bullish. That's how we knew to hunt for the bullish models in here. You need to have that higher time frame analysis in mind. So if you're interested in that, click on that first link down below. So since it expanded over that buy side, I now have the draw on liquidity that price is going to want to take out this high up here because that's the next buy side above. If they reversed it above here and we saw expansion lower, that would be enough for me to start looking for bearish 2022 models on a lower time frame. We don't get that. So now my bias is that price is going to head here. And remember, we still have the weekly time frame taking out sell side, the SMT with NQ, and now it's expanding towards buy side liquidity, and there's relative equal highs right here. It's likely to trade into that. So now if we skip it ahead, I waited until the PM session. I tweeted about this, so you can check out my Twitter. When price is trading in here, this is in a trending environment. In these type of environments, you could look to get in on bullish order blocks. So when price returns to bullish order blocks, right, when institutional order flow is bullish and it's likely to trade higher into the buy side above here, down close candles will act as support along the way up. So when price trades back into this order block, that's likely to act as support, and then price likely to expand off of that. So I posted in my Discord here, right? This is an area where I pretty much think they're going to start to pivot price higher. This is where they're going to key up on that order block and then start to trade higher. This is where smart money is going long. So in here, we can mark out that 15-minute order block. Remember, we have the bias that the 4 hour is going to draw into the buy side above. Right on the 5-minute, I could scale down to a lower time frame. I want to see some liquidity purged. So we're using that 4 hour bias to now start hunting for bullish models. Now, Dan, why wouldn't you trade this market structure shift right here and take an entry off of this bullish fair value gap? See how we have these perfect relative equal lows below between this low and this low? That's clearly engineered liquidity. Smart money typically runs it back on those before the real move happens. So I wanted to see both of these lows taken out. Once they were taken out, all right, since I had a strong bias, right, when price is below the sell side liquidity in here, this is an area to look for lower time frame models. On the 1 minute, takes out liquidity. You get a market structure shift higher, creates a bullish fair value gap. This is the clearest long. I traded this long on NQ, and then I held for the buy side above here. On ES, if you see this example right here, this is the exact same day, and I'll actually go back to the 15-minute time frame so you guys could see that this is the exact same fractal of price action in here. On ES, I did take a turtle soup, which is just buying sell stops. It's a little bit of a more advanced model. But I posted this to Discord members. You can see there's the order block. Not likely to trade beneath there. Price is likely to start targeting the buy side above because we have the higher time frame bias, right? It's likely to trade even higher, and it's set relative equal highs, which means that smart money is engineering buy side liquidity. So I took a turtle soup long, which is buying the sell stops. This was a 3.89 R trade, and then price delivered into the buy side liquidity. So there's two things you could have done there, right? You could have bought around that order block, buying the sell stops, a little bit more advanced, or you could wait for the 5-minute sell stops to get ran, or the sell side liquidity, wait for it to trade beneath the old low, then go onto a 1 minute time frame, wait for the 2022 model, and here would be the long. Now, Dan, where do you put your stop loss? You could have it beneath candle number 2 of the fair value gap, which is right there, and then wait for price to trade higher, or the safest stop is going to be at the swing low. I recommend putting the stop at the swing low, not financial advice, but it is just going to be easier to not get stopped out. There's some times where it does have deeper retraces into an order block, and then you do get stopped out, and then it does trade towards that draw on liquidity target. So the safest stop is going to be at the low. So if we let this 4 hour play out even more, you can see that price starts to trade higher. Notice how it expands over the relative equal highs. Now it is extremely clear that this was the smart money reversal of a market maker buy model. So I did tell Discord members right in here, I think that we're going to start gravitating up towards the buy side liquidity. And then you can see every single day in here, now that you have the idea that price is expanding over these highs, it's going to want to head for that original consolidation of the market maker buy model. If you don't know the market maker model, I do have a video on it. It is my most popular video on my YouTube, so you could literally just go to videos and then click on the popular, and it'll be the first one that pops up. So if we let this 4 hour play out, you can see that it ends up drawing into that buy side liquidity above. So that's how you could utilize the higher time frame and then scale down into the lower time frame. Similarly, for the bearish idea, you're just inversing it. So when price is on the weekly time frame, I want to see what liquidity was just taken, right? This is buy side liquidity on a weekly chart for the NASDAQ. So it goes above an old high. There's going to be buy stops above here. Smart money is selling to the buy stops. So I want to see, does price start to expand lower? We get that. Price starts to expand much lower. Then we get a retrace back up. So notice how it takes out this liquidity on the weekly time frame. But then price starts to retrace higher, and it respects this inversion fair value gap right here. So I'm just marking out some PD arrays, seeing where price is delivering from, which PD arrays are being respected. Price trades lower. When I drop down into a daily chart here, it becomes more clear. Why? See these relative equal lows down here? It trades close to that, and then it creates another set of relative equal lows. Typically, when price is in a buy program, it won't leave behind all of these lows. Why? Because smart money is going to want to take those out. Why? So they could flood the market with sellers at a lower price. So if smart money is going to short in here, they have easy liquidity to get out of on the opposite side of the range, because retail is going to think that this is strong support. When price trades higher on the daily time frame, we can now start to mark out PD arrays and levels of liquidity. So we have this level of buy side liquidity. See how price trades higher here, and it taps into this order block. When price trades higher, so we have these two up close candles that tapped into these two up close candles. This now is a propulsion block, a order block that retested an order block. When price trades into a propulsion block, you do not want to see 50% of that propulsion block get traded to or get overtaken. So you don't want to see a close above the 50% level. So when I'm looking at setups in here, I'm looking to see, does price reverse above this buy side and in that daily propulsion block? Because there's still so much liquidity lower. If price is going to reverse, this is an area to do it, because it's not going to want to trade above 50% here. Price takes out buy side, starts to displace lower. Notice how it creates a market structure shift lower right here on the daily time frame. Right, you could frame a bearish bias much earlier, looking at a lower time frame in here. Just kind of showing you guys the full picture in here. But on the daily, we create a shift lower in market structure, creates a daily fair value gap and a market structure shift lower. Where is price likely now to target? It's likely now to target the liquidity lower. So now we have a daily bearish bias. I can now go into a lower time frame. So let's go into like a 1 hour chart. And this is when I can start to look for bearish setups. See these two up close candles in here with this imbalance? This is something I want to have highlighted. These two up close candles, this is a bearish order block. Because it has that imbalance, that's the only reason it's a bearish order block. So I can mark out the opening price of that, or I can mark out 50%. That's also going to be a key level. That is mean threshold of the order block, or 50%. When price trades back to there, right, this is a PD array on the 1 hour that I could start to look for bearish setups out of. On the 1 hour time frame, notice how it trades higher. Taps into this buy side liquidity. So I'm going to start marking out old highs on the 1 hour. It takes out the old highs, and then it starts to displace lower. And what does it do? It creates this 1 hour imbalance. Since it does that, I can now drop into a 15-minute time frame, and I notice that there is engineered liquidity below. Notice how it leaves all of these relative equal lows in place. This is indicating to me that they're going to want to run it back on those lows because the higher time frame is bearish, it's engineering liquidity, and now we do have a bearish shift in market structure lower. Also, that 1 hour, notice how it's trading into the mean threshold of that order block. So when price taps into that order block, right in here, this is a potential short targeting the lower levels of liquidity. So this would be a potential entry. This is Tuesday, September 19th, with a stop loss above this previous high up here, targeting the liquidity down here. So you could get in at a 1.7R, you could wait for it to retrace a little bit higher, then get in a little bit better RR. Or what you could do, if you don't want to trade the higher time frame, now we have the idea that price is going to trade lower. I can wait for some form of liquidity to be ran. So we have these 15-minute relative equal highs. I can wait for price to run that. Once it runs that, do we get a shift in market structure lower, creating a bearish fair value gap? So on the 5-minute time frame, after taking out the buy side, so it took out buy side liquidity, we have a bearish bias that price is going to head lower. Now I can mark out bearish fair value gaps. So see this bearish fair value gap? When price returns into that, that's a potential short. Why? Created a market structure shift lower here. It has a bearish fair value gap, and the 1 hour is bearish, and also the daily is bearish. So this is likely to work. Stop loss can be placed above this high. Where can we target? As a low-hanging fruit, you could draw a fib from this swing low to this swing high, and you could target an imbalance in a discount of the range. So when price returns below 50%, you could target this bullish fair value gap. It's a discount array. What's more likely to occur is since smart money is short, they're going to distribute price down to sell side liquidity, which is all the way down here at 15,379.50. And this gives you a little bit better RR. So if you enter there, you can wait for price to trade lower, and you can see it takes out all of the liquidity beneath us. So that is exactly how to do top-down analysis using ICT's concepts. If you guys want to see more videos like this, hit that like button, and I'll see you guys later.